To your point about getting out and about, I'm sure there's some long lunches happening in Victoria right now, Melbourne. Yeah, great to have you guys along and out of the lockdown. Let's get to it, shall we? We've been running our Stocks for a Crash series. So Adam, given what you've just said, I guess you're not anticipating any sort of a crash, but if there was one, what company would you really love to have or own more of on behalf of your clients, but you just think it's too XE right now?
Well, look, there's a couple of stocks. I mean, obviously something for a big crash, you'd look for those defensive names. So that's, the likes of Telstra, Amcor, Transurban, those kinds of things. They're the ones that use sort of the defensive parts of a portfolio. And then even potentially looking at some hybrids or those kinds of things coming from the major banks. That would be something that I would look to. The stock I've chosen today is Aussie Broadband. It's currently sitting around $4.90. It's had a fantastic run. I've been a buyer of this stock for the last 3 months, maybe 6 months now, and it's been a really good one for our clients, and we've done very, very well out of it. Just today, they actually answered some press speculation that they potentially might be taking over another telecommunications business called Over the Wire. OTW is the stock code. Now, obviously, this one at $5 probably looks like it's fully priced at the moment. But again, if this acquisition does come through and they do pull this off, it will become Aussie Broadband and OTW together will become probably one of the largest telco players, obviously behind Telstra, but one of the largest telco players on the ASX. So it's a lot about scale. It's a lot about growing that business and how those two businesses are going to work together. So look, if there is a crash, Aussie Broadband, I think it's a classic story. It does some really good service for customers, and it's been a really good one for us as well. But at $5, it's looking a little bit pricey. If we could see a little bit of a pullback, they just did a raise at $4. So, if you got us somewhere closer to that, then you'd be definitely backing up the truck on that one.
Yeah, and in keeping with the theme, if there is a crash, telcos at this stage of the game, I mean, they're defensive as well. Broadband, who could ever cut back on their broadband spend these days? Jun Bei, same sort of scenario for you. Perhaps a company that, look, if there was a significant pullback, you'd be looking to top up or to get into because you've missed the boat. What is it?
Look, actually, what the stock I recommend is actually something I thought, look, if there's a pullback, this stock will outperform enormously. I'll be buying it today, or even if there's a minor pullback, it will be incredibly defensive if the share market ever falls, and outperform the market if the share market continue the way it is. Look, this company is Endeavour. That's the magic stock. What can go wrong selling liquor to everyday Australian? Look, the earning has been very defensive. However, the earning was impacted by a shutdown in the restaurants and hotels. And as the world reopens, there will be more consumption of alcohol, through its the higher margin product through its business. So you should see the earning doing, very, very well as the world reopens. But if the market does have a, sell down, this business is going to be incredibly defensive, for its Dan Murphy liquor business. Just simply, it's really selling, your bottle shop, your local bottle shop to everyone.
Yeah. And we saw it through the pandemic. I mean, if anything, people consumed more alcohol, probably just to, put some salve on those wounds. So that's what we've got. Endeavour and Aussie Broadband, two defensive stocks for a crash, but looking pretty good still around now as well.